Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So the situation on the market is changing rapidly right now. It's because a lot of information is coming. So yesterday was once again thrilling session. It's because first is the JOLTS report was relatively poor, showing the vacancies in the job markets, showing the chilling down the job market, and signs and everybody have treated this as a sign of the recession. It's dropped on the manufacturing orders as well, so also shows the slowdown in the manufacturing sector. So as a result, you can see that first it was some jump in the dollar price, but later, close to the end of the session, when different information have appeared in the media, such as even government party start some pressure on Jerome Powell to stop rate change. So this now is becoming the external political pressure on Jerome Powell. It's actually something like that actually breaks the normal segregation between the economical authorities, fiscal authorities, and political authorities. Now they're trying to intrude in the sphere that actually doesn't belong to them. And this, it's not really good sign actually. Discussion of the debt sale, it seems that's moving out from the dead point, as Biden have invited the members of the two parties to discuss the debt sale. So I'm not sure this will bring some fruits, but still something is going on this subject. Banking sector is also feeling really poor. But in the current moment, I wouldn't overestimate these moments. It's just because we do not see the collapsing of the banking system. We see centralization. Because banks that have been exploded, they actually do not lose the assets. They was actually absorbed by larger banks. For example, JP Morgan get the First Republic Bank, and this is all analysis tells us great deal. It's just because you should understand that the big banks have really big cash positions. It's even bigger than the United States Treasury has. For example, the same JP Morgan has approximately around 1 trillion in the cash. So it could just close some minor gap of the First Republic Bank. It has in the liquidity by around $170 billion. And it get assets that 3-4 times greater than actually he uses the assets to close this problems of the First Republic. This is great multiplication in assets, and in the current point, besides the in general this collapsing of the banks, it doesn't lead to some problem in the fiscal sphere. So the money supply actually remains the same. It's just redistributing from one point to another, and makes a really very limited impact. Mostly this is psychological impact on the situation that small and mid-sized banks have the problems. But at the current moment, nothing really terrible has happened. So, and this is only the JP Morgan. We also have the Citi, we have the Goldman Sachs, Wells Fargo, some Morgan Stanley actually. So they have a lot of resources to get a few dozens of some kind of the First Republics, and at this point, at the current point, I wouldn't say that it's really where I should speak about the collapse of the banking system. But of course, the signs, it's mostly it makes impact on the minds of the investors, and it's of course difficult to say the positive. But it is not yet some really disaster for the banking system, for the general financial system. So what we have on the euro currency in the current moment, of course, it's not really a good idea to predict what will happen later in the session. I still think that 25 basis points we will get. The most interesting is that what Jerome Powell will tell about the current situation in the economy, because in general we do not have really some devastating statistics. Job report previously was more or less good. Inflation, yes, stands stubborn, but it's not rising. So in general, it's somewhere in the same levels. And from that standpoint, if you exclude anything, other points, we could say that it's really nothing really curious if Jerome Powell, for example, increased rates in June as well. So economy situation lets him to do this. But there is another reasons right now, mostly political. It's now involving and intruding in this situation, and it's very interesting how Jerome Powell will try to just act between these two moments. So on the daily chart, as we said, bullish context still stands, and yesterday performance mostly confirms that. It's just because recent spike down has happened that we discussed right to the 109.50 area, but it doesn't break the overall tendency of the high lows and high highs. And from that standpoint, we still think that dynamic pressure exists, OP is not touched, and market keeps chances on a possible upward action. Currently, bulls, yesterday we said that bulls should sit on the hands and wait what will happen, and today there's something to watch for. On the 4-hour time frame chart, what we have, take a look. Market is returning back inside the broken channel. This is of course bullish sign, because in this case we could treat this as a bearish trap. This was temporal breakout, market returned back up. Currently we can't consider some significant upside pattern. So here we do not have the butterfly, just because this spike is above this one, and we can't say that this is the wing of the butterfly. And that's why we have to focus on some patterns that stand on lower time frame on the hourly chart. And I offer you to keep an eye on this one. This is our recent mess on the euro currency. Indeed, we said it's probably opportunity to go short. This market could take it out at the lows because the fake of the hand shoulders has not been confirmed officially. This market has to drop below these lows, below the low of the head. That has happened. And now we have the sharp reversal. I offer you to increase the scale and now take a look also at the hand and shoulders, but on this greater size. Now I will delete everything that we do not need anymore, and you see it more clear that potentially it might be also in kind of the hand shoulders. At least it's something to watch for. I suppose that's here we're talking about some kind of the 127 probably hand shoulders, not 1618, but since our prediction here looks relatively strong, so maybe a retracement will be not as deep as left arm stance. So probably we could focus on something, some high standing levels, almost 127. So indeed, it's 127 hand and shoulders. So that's actually what bulls could consider. Use the fib levels, probably it will be somewhere around 50%, I suppose. Fib level around 50%. I think it's around 109.90, somewhere of this. Hardly we will get the drop below, and it's around 109.60 once again to keep the harmony with these lows. Theoretically it is possible, but taking into consideration fast rebound here, I would consider some near close standing level. Probably 50% level seems nice in this situation. And then you could make the decision on possible position taking. So now bulls is getting the chance for trading, is because the market is forming the pattern that potentially they could use for performance in the nearest few sessions. So that's actually what we have currently on the euro currency. Let's keep watching. The same story you could consider on other markets right now, particularly speaking on Japanese yen. You could see approximately the same stuff. This market, despite that strong rally yesterday, it's now turning to some pullback, and actually the butterfly is still valid despite this recent spike. So on the daily chart you can see market was turning down. So that's why on the euro currency also we could get some surprises, especially from the Jerome Powell. So let's see what will happen.